Hello viewers, I am Sanjeev Pandya welcoming you to another episode of the Tax Time. Your taxes matter. As you know by now that every week we not only give you tax updates and rules and regulations, but also we pick a certain topic which can certainly help you when you go to file your taxes. And of course, all the advice and guidance in this show is by Mr. Ajay Kumar, CPA of SAI CPA Services. Once again, he has joined us. Sir, how are you? Welcome to the show.
Thank you, Sanjeevji.
All right. When you file a tax return and when you go line by line, there's a one very kind of attractive line or something that really makes you want to write something more and more, which is called donations.
Absolutely.
Contributions.
Absolutely.
Right. So let's say if I go to a temple or a church and then I donate certain amount of money every time I go there, in the donation box, can I all deduct it?
You have the right to. You really donated the money. The key is, where is the proof? If you stay there in the temple, in the church, you give them the money, you get a receipt, you have a proof.
But let's say if I just donate it in donation box, or even for example Salvation Army, you're walking down the street and there's a volunteer with Salvation Army and has a little bucket and everything, and you drop $10 bill, $20 bill in that, and you do that multiple times because your heart says so that you want to do something good, you want to donate something, right? Is there a certain limit up to $300, $400, $500? Is no receipts needed?
No, there is no such limit where the receipts are not needed.
Really?
So up to $250 you can donate in like-kind donation. We call it clothes and other merchandise.
Okay.
But you need to have a receipt. The appraisal is not needed from a third party if the value of the items you are donating is less than $250.
I see. Okay, appraisal is not needed. So as a CPA, when you file someone's tax return and when you're going over through these things and they say donation $5,000 for the year I made, how do you convince your client that exactly what they need to do to claim that $5,000 deduction?
Well, the client has to have some sort of proof, receipts to justify, to prove. But please understand, it's client's tax return. We are their advisor. At the end of the tax prep, the client is signing the tax return.
Correct.
So the client is responsible for the numbers that are included on the tax return.
But you must guide them correctly.
So it's our responsibility that the IRS says the proof has to be contemporaneous proof. What it means is, while you file the taxes, you have to have the receipt at that time. You cannot say, oh, I donated the money, I don't have the receipt right now, but if needed, if IRS ever asks for it, I can get the receipt. That's not acceptable. You have to have the receipt with you in your hand, the proof of donation. That's why they call it, it's very, very clear. There is no gray area in there. The proof has to be contemporaneous proof. You have to have the proof at the time of filing the tax return.
Okay, now let's just talk about our community. We are, let's say, kind of very religious, and we go to religious organizations or temples, and whenever we feel like it, we donate certain amount of money over there, and not take receipt, not necessarily, because we just donate money. Now, temples and churches are kind of okay because they must be, 501c3, the IRS recognized entities. But there are some organizations, they get together once a month or once every 3 months or 6 months, right? And you donate a couple of $100 in it. And then at the end of the year, when CPA like you comes up and say, do you have a receipt? Of course, we don't have a receipt. What's the name of the organization? Then if that organization is not US recognized, when I say US meaning IRS recognized, what happens to my donation at that time?
Well, if that donation that you gave to this organization is not for the business, so there are several levels to it. Say, for example, Chamber of Commerce. Chamber of Commerce typically are not 501c3. They are not non-for-profit companies. They are non-for-profit companies, but they are not religiously defined as 501c3, where the donation to, in this example, Chamber of Commerce is not deductible on your personal tax.
True.
But if you are donating money to Chamber of Commerce, hopefully you have a small business that you are trying to promote over there. Then that deduction can be included as part of your business tax.
That's a membership fees.
Membership fees.
That's a membership fees, right? So on the same line, let's say if donation is not deductible, then membership fees up to certain point is deductible. What about club fees? What about certain subscription? Let's say if I'm subscribing Money Magazine, Fortune Magazine, Time Magazine, at the end of the year I spend $300-400. Can I say this is to help me to live, or this is to help me with my job, or to improve my knowledge that I'm subscribing this?
Up until last year, up until 2017 tax return, it was allowed to a certain extent.
Correct.
You could claim it as a job related expense, but as we discussed in our episode 1, going forward, if you have a job related expense, unreimbursed expenses are not allowed anymore. If you have a business, I'm a CPA, I'm allowed to spend some money on a Money Magazine, for example, or in a CPA related magazine, and it's part of my business related expense. But if I don't have a business, if I just have a job and I'm subscribed to Money Magazine because I want to do a better job going forward, those job related unreimbursed expenses are not allowed.
Okay, so then you have your own business and I don't. We both go to the temple, and then I donate certain amount of money and you also donate it in the donation box, hypothetically speaking, that you put in donation box. As a business, are you allowed to use that amount to donate it because you have a business and I don't have a business and I can't take deduction?
No.
It doesn't
In
work.
both
It's
cases,
the same for personal and
both
business.
cases we should not be allowed unless we have the receipt.
Correct.
So for the business, what we meant to say to our viewers is, if you are promoting your business, then you're allowed that expense as a business promotion.
Correct.
So if there is a charitable event and you are putting your board over there, or you are sponsoring some sort of a scholarship, even if that organization is not a 501c3 organization, you are still allowed because you are trying to promote your business. It's an advertising expense.
Okay.
But if you are an individual with no business, then you don't have an advertising expense as a claimable
So
deduction.
you can take that deduction.
Absolutely.
But the key thing is that to have a receipt. Whenever you're donating something, make sure you have a receipt, and for some reason, if you decide not to take the receipt, you basically, on your own
you
risk.
can potentially lose the deduction.
Correct.
And since you are talking about the receipt, Sanjeevji, you have to make sure the receipt has a proper date and the receipt has the amount listed over there.
Ji.
A lot of times from the Salvation Army, from Lupus, from all these organizations, people give the bag of clothes and you get the blank receipt.
Okay.
That blank receipt has no value.
All right. So up to the receipt point, we're okay, but there is actually more for all of us to know when it comes to donation and how much can you take deduction on your tax return. More information coming your way right after this messages. Please stay with us. Welcome back to the second segment of the Tax Time, Your Taxes Matters show. This weekly show brings you all the latest on the taxes. In today's episode, we're talking about donation. How much can it be deductible and how it can be deductible? Of course, I have a receipt that I took a break, so I can take that as a deduction. If I did take a break, I wouldn't have a receipt and I can take deduction. But in all serious matter, let's continue this forward. With the a donation, I have a couple of questions, but before that, I want you to say something about time and services.
Absolutely, that's a great segue. A lot of times people are not just donating money, they are donating their time.
As a volunteer.
As a volunteer.
Correct.
For a lot of these temples, churches,
Yes.
a lot of non-for-profit companies,
yeah.
they are spending a lot of time. And we get this question quite typically, that I spent 2 hours and I typically make $25 an hour. Can I deduct $50? My time value as a deduction. So that is not allowed. Time value of service is not allowed as a deduction. It has to be out of pocket expense. So what can be allowed is, if you drove from your home to that place to do the voluntary service, you have the right to claim the gas expenses or the standard mileage expenses to go there to provide that service, because that's out of pocket expense for you. But you cannot claim your own time as a deductible expense.
Your time is basically gift to this charitable
Absolutely.
organization. What you're saying is that you can't even deduct minimum wage, huh? $10.
You are
an hour or
not
something.
allowed the time value.
All right, so that's a gift. Your time is basically a gift to that charitable organization. Now, a really important question comes to my
Please.
mind is that many of our viewers and all of us, we see the ad, either we hear the ad or we've seen the ad, donate your car, donate your motorcycle, donate this, donate that. What are those entities? When you donate your car, as many people would like to know more details on it, how does that work?
So a lot of these companies are registered as a non-for-profit companies, 501c3. They are real companies. It's not a scam. When you donate your car, as opposed to selling your car to somebody, then this company is supposed to value your car. Oh, your car is worth $1,000 in the market. Then they will write up this receipt for you. We took this car, this is the VIN number, this is the market value, and that receipt becomes your proof for the donation.
Correct. And that must be attached with your tax return.
It depends on the amount.
Okay, all right.
If the amount is large enough,
Chalo, theek hai. Hypothetically speaking,
Absolutely.
that receipt, let's say if you were to take the deduction, whatever the amount is large enough or whatnot, then the receipt must be attached with it.
absolutely, you should have the receipt.
Okay, and these companies you mentioned, they are very well known companies and they are set up that way that IRS recognized. On that path, I'd like to ask you a question. How do you know if that organization is qualified for charity or not? So what one can do to verify if the organization is qualified for charity before making donation?
That's a great question. That's a wonderful question, and I want our viewers to know that anybody can go to IRS website. There is a 990 lookup. All this information is public information. You can find out about any charity, if when they registered, how long they have been in the business, how did they do in their last tax return filing, and if they are recognized charity, 501c3, and active charity. A lot of times these charities are not active. A lot of times what happens, people start the charity, don't do the proper filing, and after 3 years of non-filing, their charitable status is disallowed, is denied. So when you are donating a large amount of money, your car, a vehicle, you want to make sure you go to the IRS website, do the 990 lookup to find out the charity is still a valid charity, a 501c3 charity.
Okay,
Great question.
interesting. Thank you for that. Clearing it up. Political parties. Let's say if I support certain candidate belongs to party A or party B, and if I make that donation or contribution, rather they use the word contribution to that person or the political party, is it deductible, or what are the things that I should know before making that contribution?
Political deductions are typically not allowed. They are allowed only to a certain limit, small limit. So you have to be careful. If you are doing it through a business account, then you can claim it as a business expense, promotion expense, and that too have certain limits to it, how much you can donate. For an individual donating money to an individual, take an example here, Sanjeevji. If you are donating money to, let's say, a party, that's deductible.
Achha.
If you are donating money to my friend over here who is going to be fighting in the election, that's not deductible.
Really?
So the money donated to an individual for any reason is not deductible. Money donated to the party, to the organization, that can be deductible.
Okay, that's a very kind of a gray area to really understand, because let's say you have a friend running for the office. I'm using this as an example, running for the office, assembly or Congress or something like that, and a friend, you want to help that person out and you want to write a check. Let's say $1,000.
But key here is, who did you write the check to? What was the name?
No, not to the
payable
party. I'm talking about that person, because the person would say that check should be payable to ABC, XYZ.
Not necessary. People are going to run for the office, they will create their own company. Ajay Kumar's promoting company.
Oh,
And then you don't write the check to Ajay Kumar,
Then
you
it
write
goes to
the
the
check
company.
to the company
okay.
that's registered with the IRS as a non-for-profit company
Okay.
to promote my cause. But if you're writing the check to an individual, that's not deductible. Even in a temple, I'm glad we are talking about it. If you write the check to the priest who is working for the temple, or if you write the check to the organizer who is managing the temple,
Correct.
that money is not deductible. The check written out to the church, the temple, is deductible.
Correct.
But the
But
check
not-
written
not
out to the
an individual.
individual who is running the temple, or even if the person is a priest, it's not deductible.
That's interesting. I mean, obviously, this has been very, very, I guess, a gray area when I say that. It also an area where many people have taken advantage over the years, and no wonder now IRS have become very, very strict, for this matter, because people have taken advantage, even if they are not donating or contributing to certain charity or religious organization, they would claim it on their tax return.
Absolutely. Religious donations, as the donation, the contribution is very, very sacred area. There was AMT, alternative minimum taxes.
Ji.
When the AMT was hitting everybody, even in those AMT situations, donation was allowed because it was seen as a sacred thing. So IRS typically don't really question donations. We tend to assume donations must be real, but it's one of the misused area. So IRS is very, very strict about it. And in the new tax reform bill, they have clearly mentioned that the proof, the donation proof, must be contemporaneous proof. Okay. You have to have the proof when you're filing the taxes. You can't say, if the need be, I can get the receipt. That's not acceptable anymore.
Okay. With that note, proof or receipt, in the show, there is always a proof and receipt needed when you take a break. When you don't take a break, then there is no proof or receipt and it cannot be accepted. With that note, we're going to take a break. We'll be right back after this messages. You please stay with us. Welcome back to the third segment of the Tax Time. Your taxes matter. Continuing with the receipt and the proof matter here with Ajay Kumar, CPA, SAI CPA Services.
Thank you, Sanjeev.
All right, sir. We are settled in US and obviously we have strong ties with our motherland in India.
Absolutely.
And there is a, let's say, organization which our family has been supporting for years and years, and I too want to support from here to that religious organization in India. It's a foreign entity, right? So how does this foreign contribution work? Is it acceptable in US?
So foreign contributions are typically not acceptable unless that foreign organization is registered with IRS as a 501c3. There are a lot of foreign organizations that have US chapters. They have a chapter over here, they have an organization over here.
They have to have that in order to be recognized by IRS, or they can go along without it?
They don't have to have a chapter over here. A lot of times, US organization, a non-for-profit company registered with IRS can donate money. So you directly cannot donate money to an Indian organization. If you were to donate money,
it has to go from here
to an Indian organization, that's not deductible for you. If you donate money to a US organization and that US organization has a project that they are promoting, it has to be controlled by the US organization.
Correct.
The US organization cannot just send the money to this Indian organization.
Because they also have to file a tax return here in US.
The US organization must file a tax return in US.
Okay. Now, speaking of tax returns, what are the forms to be filed with this contribution, foreign charity and whatnot?
So not for foreign charities. Foreign charities typically, if they are not registered with IRS, they don't have to do the filing. For the US charities that are registered with IRS, they have to file some form of 990.
Correct.
If their total collection is more than $50,000, they have to file a 990 EZ or 990 PF if it's a privately owned organization.
Is that the only thing has changed this year, or there are other changes, especially in this category?
Well, the charitable donations were allowed up to 50% of the AGI. If somebody is making $100,000, they were allowed to deduct up to $50,000. In the tax reform bill, this 50% has been increased to 60%. So now people can donate up to $60,000 if they are making $100,000. This is one change, and you would say, wow, this should be a good thing. But the second change that's affecting the charities, that's affecting the donation, is standard deduction. Standard deduction has been increased to $24,000 for a married filing joint tax return to discourage people to use the Schedule A, the itemized deduction. All charities deductions, the donations goes on Schedule A. So a lot of times people are going to be discouraged to donate to the charities because they are not doing the itemized deduction anyway.
Okay.
So a lot of charities are complaining that this year going forward, they will not get as much charitable donations because people are not itemizing their tax return, people are not getting the same benefit. So far, people don't know about it yet.
Correct.
People haven't seen it.
Absolutely.
They are still donating, even though the change went in effect from January 1st, 2018. But a lot of general population haven't seen the real impact. They donated the money, hoping, expecting that this will be deductible. But when they go to the accountant, and the accountant will tell them, oh, you're using the standard deduction, so charitable donations are not allowed for you. They will not be happy about it.
You think this kind of change will stay on for a longer period of time, or eventually in the near future, IRS or the government will have to make a change in it to make it a little easier and smoother?
Well, the current changes that are proposed are up to 2025 for next 6 years.
Oh, that's it.
But that being said, they can be changed any time. If there is a real pushback from the general population, the changes can be done. But the current proposed changes are valid till 2025.
Okay. Now, with all these donations, contributions that we are talking, somewhere along, one common factor comes is a non-profit. Right. IRS recognized non-profit corporation, non-profit company. What exactly is non-profit company for a person to set up?
A non-for-profit company is very easy to set up. You can start a company in the state, then you apply this is called 501c3 status with the IRS. Takes about 6 to 9 months to get it. It's not overly cumbersome, it's not overly expensive, and the company becomes a 501c3. So as long as you do the minimal filings at the end of the year, 990 or 8868 as needed, you can maintain a non-for-profit company of your own or for your own purpose very, very easily.
Can salary be distributed out of that once you set the company?
Absolutely. I mean, a lot of non-for-profit companies like the Salvation Army, the Red Cross Society, they have thousands of employees. They're paying salaries. But you can't really have a non-for-profit company for yourself and pay salary to yourself. I mean, there has to be a relationship. There has to be an arm-length relationship. Say, I have a non-for-profit company. In order to promote the non-for-profit company, I hire your services.
Okay,
I'm allowed to give you salary.
So, for example, Salvation Army and Red Cross, and they are different altogether. We know that. So, let's say if there is an association. Right. In a community, there is an association, and that association collects subscription fees or membership fees, rather, yearly or monthly from the members. And it's a non-profit corporation, and one person, 2 people, 3 people are running it, right? And they survive on collecting these fees. Can they pay themselves a certain amount of salary or certain amount of, amount because they are donating time into this?
That's a great question. A lot of people get confused about it. So these type of associations are not charitable associations. They are not.
Even though if they say they are 501c3,
they are not 501c3.
Really?
Either they are 501c4 or they are 501c6.
Achha, there is a difference between 4 and 6.
Absolutely. So it's not a charitable organization. They're collecting fees to provide certain services.
Correct.
We will clean the snow, and you pay us a monthly fee. So in these situations, the person who is managing the work can be paid as long as there is a membership agreement. Why would somebody do this work without actually being paid for it? But these kind of organizations are typically not 501c3.
Okay, that's all. I think we should be very, very careful with that. Anything else you want to add in the end?
So donation is good. You have to ask yourself, why are we donating? If we are donating to get the benefit, the tax benefit, make sure you have the receipt. A lot of times people donate their time, the money, the services, not worrying about, not thinking about the tax benefit. And that's okay, as long as you know that you are donating money and you don't want the tax benefit out of it. But if you want the tax benefit, you make sure you have the receipt for it.
Okay, good. If I just want to buy lunch or dinner for my employees here and I want to donate food to them, can I save receipt and claim deduction?
If you have a business, then you can claim it as a meal and entertainment expense. More of a meal expense than entertainment, unless you are planning to do something else.
No matter how hard I try, I just can't get away with Mr. Ajay Kumar CPA because he's so knowledgeable and so experienced. Once again, thank you so much for your time.
You're very welcome.
Thank you for educating us. And in today's episode, we talked about donation and a contribution. Thank you for watching the show. I am Sanjeev Pandya, wishing you all happy and tax-free week ahead. Next week, when we come back, we'll have another important topic for you. Till then, stay tuned. So long.